Hi, today I'm going to break down the Q3 market update that I released not too long ago. Today I want to answer the question of so what, and I want to make a couple of clarifications. So, first things first. When I compared in the last video was Q3 2022 versus Q3 2021, and that's what we were seeing as a comparison point. Now, a lot of people have been asking what's happened from Q2 this year to Q3 this year, and I'm going to provide a bit more clarity on that. So if we're looking at the Montreal market, single family homes have dropped about 12% from Q2 to Q3. The condo market on the island of Montreal has dropped about 7%, again from Q2 to Q3, and multiplexes up to 5 units have dropped 3% from Q2 to Q3. So we're seeing a consistent drop across the board on the island of Montreal, and that's somewhat consistent to kind of the trend that we had noticed in the previous video. Now, so what? What does this mean for people? Because 12% might seem like an alarming number. Well, interest rates have gone up significantly over that period of time. Therefore, we're going to be paying a lot more interest versus the capital that we're going to be paying on the same mortgage. How do I break this down? Right now, it is actually even still cheaper with the higher interest rates to purchase a property if you're considering taking a 5-year term. If I were to take a property that's listed at $700,000 in Q2 and I originally got it at, let's say, a 2.8% interest rate, I would have paid, yes, significantly less interest, but the total cost would have been higher based on my initial acquisition price. If I were to take that same property that was $700,000 and reduce it by 12%, which is the decrease that we've seen in the market recently, we'd be purchasing at about $609,000. Now, if I were to apply a 5.5% interest rate to this, I would be paying about $50,000 more in interest over that entire period. However, I saved $90,000 on the purchase price. Therefore, you'd have 40 grand of upside from the hop. Now, this is also assuming that you actually take a 5-year term. Right now, we're not advising any of our clients to take a 5-year term. We do believe that the interest rate hikes are temporary, and thus there's going to be a lot more upside if you were to take a 2-year term, or if you were to go with the variable rate and really jump on the change as soon as it gets better. If you were to do that, then the upside would be significantly more because you wouldn't be exposed to the 5 years of the higher interest rate. You would capitalize on a shorter period of time. So for people who did buy into the market that was a little bit higher, it's okay. You bought this home or this condo because you were interested in living in it, and you did it for your family. You wanted a place to be and sustain yourself. Real estate prices, like the stock market, will go up and down, and over the next 2 to 3 years, prices are going to continue to go up. We're going to see this trend happen very, very shortly. We're expecting to have maybe one more interest rate at the beginning of next year, then they should be stabilized for a while before we see them come back down. The latest economic reports that I've been reading are saying that by 2024, we'll start to see interest rates come back down. And that's when I suspect we're going to see prices start to decline very quickly again. So, for people who are currently in the market, don't fret about the high interest rates. Take advantage of the fact that prices are down. We're finally negotiating the price of houses down, which is creating a lot of opportunity. It's not uncommon to see $50,000, $100,000 under asking offers and them actually coming to fruition. For people who have bought, just sit down, enjoy your home, you have a roof over your head, and there's plenty of things that you can appreciate about that. My name is Aguinaga, founder of LJ Realties. If you have any questions or would like to connect, please follow the link below. Thank you so much.